Assalamualaikum guys. We will continue from where we left. I think earlier what we did was to look at the fact that the commercial bank that was adopted by Islamic Bank are essentially interest-bearing bank. These are riba bank, where deposits were mobilized or interest-bearing deposit were mobilized to make interest-bearing loan. And in the earlier video, I have illustrated to you how the bank is able to generate profit based on the interest-bearing deposit mobilization and interest-bearing loan. At the same time, there is another item that I need to introduce. That is capital, in the sense that any license company by the regulator must have paid up capital, and the paid up capital for this bank, for example, is 10 million. But in the banking business, capital is not used to make loan. Capital is used as a standby to absorb any losses that is coming from the loan. So loans are essentially issued from the deposit fund, right? So the deposit fund or the interest-based deposit will be used by the bank to make interest-bearing loan, and the capital holding is meant to support the loan against any losses. So any losses from the loan, for example, if in the loan of 100 million, there is a 2 million loss, then that 2 million loss will be absorbed by capital, and that capital will decline from 10 million to 8 million if there is a 2 million loss in loan. So that is capital, and usually capital will be parked in the asset side as securities or bonds that can easily be liquidated when there is a need to raise cash to pay for the losses. But what we want to do today is to look at the income statement, given the fact that now the loan acquired from the deposit is diversified. So we have a loan portfolio consisting of housing, vehicle, personal, and business loan. And then we have a portfolio of deposits of current account, saving account, and fixed account. So let us just look at the breakdown of the deposit. So we got current account of $30 million at 0%. So the current account, it is a transaction account. So there is no term account in the current account. So the depositor will not receive any interest on the current account because they are basically using the money for transaction on a daily basis. Saving account of 20 million at 1%, yes, because the saving account less used as transactional account compared with current account. But the fixed deposit of 50 million, the interest income is at 3% per annum because, as we know, fixed account or term account, we got 1 month, 3 months, 6 months, 9 months, 12 months. So if we keep our money there, based on the term, then the depositor can earn interest from the term deposit. So this is a term deposit at 3% per annum. And we got also the loan portfolio consisting of housing loan 40 million at 7%, vehicle loan of 20 million at 5%, personal loan of 30 million at 10%, and business loan of 10 million at 6%. So usually personal loan are more risky than vehicle loan because personal loans are usually clean, unsecured. So it is more risky to the bank. So you can see that the loan rate for personal loan are much higher than the vehicle loan. So let us look at the interest revenue from the loan portfolio. So from the housing loan, we can see that the interest revenue will be 40 million multiplied by 7%. So that gives us 2.8 billion. And then the interest revenue from vehicle loan will be 20 million times 5%, that will be 1 million. And then for personal loan, the interest revenue will be 3 million, that is 30 million multiplied by 10%, that will be 3 million. And the business loan will be at 6 million, based on the 10 million times 6%. That is 0.06. My apology. It should be 0.06 times 10 million. That will give us 0.6 billion. We add up all this interest earning. That will be 7.4 million. And then we go to the interest expense, the breakdown into current, saving, and fixed account. And we can see that current account does not give any return. So that will be 30 million times 0%, 0. And saving account at 20 million at 1%. So that will be 2 million from the saving account. And then the fixed deposit, 50 million at 3% per annum. And that would be 1.5 million with 50 million multiplied by 3%. 1.5 billion. So we got the interest expense total, which is 3.5 million. And when we look at the income statement, the interest revenue at 7.4 million and interest expense at 3.5 million. So gross interest earning is the difference between 7.4 and 3.5. So we got 3.9 million. And we have to add on a few more expenses like the overhead for payroll and for procurement. That would be 1 million. And the loan loss provision at 1 million. And we see that the net earning now will be at 1.9 million. So 3.9 million minus 2 million, we will get 1.9 million. So that would be the net earning for the bank. And we can see here that this 1.9 million of net earning will be added on to the existing capital of 10 million. So there will be a capital growth from 10 million to 11.9 million. And this is how the banking system will operate. So when there is a good earning, we assume that there's no dividend distribution. So the entire earning will be added on to the capital. So we got capital growth from 10 million to 11.9 million. And we can see that this is how the banking system operates. And it is very important to also note that in the Islamic banking business, when albay is made to replace the interest-bearing deposit and interest-bearing loan, we will see that the story of capital requirement will become very, very interesting, because as we know that the role of capital today is to back up the loan exposure, right? Capital fund is not used to make loan. Capital fund will serve as a backup to the loan. In case the loan get into trouble, if there's a loss on the loan, then the capital will be absorbed. The capital will be absorbing the losses. So if there is a positive earning, then the earning will be added on to the existing capital, and there will be capital growth. If there is a loss, there will be capital depreciation. So capital is a very important component in banking, because that will be the main focus of banking is to ensure that the shareholder are able to make enough profit. So the return on equity is one of the key performance indicator of the bank to ensure that the bank is able to reach the targeted return on equity, and that return on equity will be equal to the bank profit divided by banking capital. So if there is an increase in banking profit, so there will be an increase in the return on equity. But then in the Islamic banking business, we will see that the application of albay will be facing a great amount of challenge, because the commercial banking business infrastructure were designed to accommodate the operation of lending and borrowing with interest, whereas the Islamic banking business is driven by albay, buy and sell, leasing, partnership, where the risk profiling will be very different from the risk profiling in a loan business. So when we look into this matter closely later on, we will see that the impact of capital holding is very, very critical to the successful application of albay within the commercial banking infrastructure. Okay guys, I think we can stop here. I'll see you again in the coming videos. Thank you very much for your time. Assalamualaikum warahmatullah.